It's been more than a month since the S&P 500 has hit a new all-time high, but we are getting closer. The S&P is around 2% away from retesting all-time highs that we last saw towards the end of March. Remember, we were hitting them so successfully, around 22 all-time highs so far in 2024, and all of that happening just in the spate of 3 months. What's different about the rally this time is, while yes, tech stocks are still along for the ride, defensive stocks that tend to work in maybe more subdued economic environment when there's concerns about the market rally have been outperforming. Take utilities, for example, now trading at the highest level in a year. Let's bring in Lukasz Tomicki. He's founder and managing partner of LRT Capital Management. He joins us now. Lukasz, what does it say to you when we are seeing this more risk-off set of the market, whether it's utilities, whether it's staples, start to perk up?
Good afternoon, and thanks for having me. I think what we're seeing is the market agreeing, broadly speaking, with our thesis, which is that it's very hard to be excited about the Magnificent Seven and big tech names, and that rather the economy is entering a late cycle, a late point in the economic cycle, and more defensive names are the place to be. You don't necessarily want to make a lot of money, but you're looking for companies that are not going to lose you money in a case of an economic slowdown.
To be clear, the Magnificent Seven seem like still a great place to be. Just yesterday, they hit an all-time high. Is it possible that this sector can rally being viewed as defensive? Because in absence of growth, at least that's what they have.
Well, certainly everything's possible in these markets. It's possible that even companies that are perennially unprofitable like Carvana can go up 30% in a day. So I can't say what's possible or not, but simply the expectations baked in to Magnificent Seven and the valuations that you have to pay for these stocks don't make them particularly attractive. Take Apple, for example. A stock trading at approximately 30 times earnings with no revenue growth, effectively declining earnings in real terms. And even the Oracle of Omaha is selling shares. So it's very hard to be optimistic on the Magnificent Seven at the current valuations.
That one certainly has been a laggard. Buffett saying he just trimmed down for tax reasons. But to your point, it has been an underperformer. What's the signal that the bond market is selling now that yields are back below 4.5%, trading at the lowest level in nearly a month?
Well, markets are of two minds. On one hand, there's an expectation based on history that we're going to have an economic slowdown, and I think that's rational. There's an expectation that the economy is going to slow, inflation is going to come down sharply, and we're going to get interest rate cuts from the Fed. That is being balanced by a massive deficit at the federal level in the United States and frankly in many countries around the world. And that is pushing economic activity forward. So there's this situation where fiscal policy and monetary policy are actually working at cross purposes. And depending on which way the wind blows, traders will feel more optimistic about equity markets or more optimistic about inflation coming down, and you're seeing that reflected in the change in interest rates. Our view remains that if interest rates rise above 4.5 or 4.75 on the 10-year, that really puts a lid on future stock market gains. And we've seen that in the past month when the 10-year went to 4.7 or so, you had real wobbles in the stock market. I think that is kind of the governor of how much more upside there is in the stock market.
All right, so we are below those levels. With that in mind, where are you parking your money in the equity markets?
We are very defensively positioned. We're looking for sectors that we think are going to do reasonably well in an economic slowdown. Some of our top names are companies like Chemed, which is the owner of Vitas, and Roto-Rooter, two very, very defensive businesses. We're looking at other names such as Northrop Grumman in the defense space, or Wyndham Holdings, the purveyor of budget hotels.